Good morning, honorable judges. My name is Dylan Nyeka, and I'm presenting my pitch recommendation on Carl Bank. So my recommendation is a buy with a target price of 81 pesos. The share is currently trading at 64 pesos. So that's an estimated upside of 26.56%. And the strategy I use is value investing. Now, Carl Bank was founded in 1990 and listed on the Ghana Stock Exchange in 2004. The company mainly operates in 4 regions in Ghana, having over 30 branches and 100 ATMs to enhance its operations. Its CEO is Mr. Philip Oredu. Carl Bank has 4 subsidiaries, namely Carl Brokers Limited, Carl Asset Management Company Limited, Carl Trustee Company Limited, and the Carl Bank Nominees Limited. They offer various banking services such as domestic banking, international banking, private banking, treasury service, retail business banking, and corporate and institutional banking. Now, looking at the overall banking industry, we have about 23 banks in Ghana and 10 of them that are listed on the Ghana Stock Exchange. The banking industry ended the year 2020 with total assets of 149.3 billion Ghana cedis, representing a growth of 15.8% over the December 2019 position. Total deposits grew by 24.4% as at the end of December 2020. Loans and advances in 2020 amounted to 34.4 billion Ghana cedis, 15.8% higher than the 29.7 billion recorded in the previous year. Despite these impressive results in 2020, banking stocks on the Ghana Stock Exchange tumbled, causing the financial stock index to lose about 236.89 points. This might be an indication that most companies in the sector are undervalued. The banking sector is definitely an attractive sector to invest in, not only because of its strong metrics, but also because it is closely monitored by the regulator, bringing some sort of security to investors. And looking at the industry key metrics, we clearly see that the banking industry or the banking sector is a sector worth to invest in. Now, in the midst of such a vibrant sector, Carl Bank also distinguishes itself with its great financial capital adequacy ratio of 22.3%, superior to the statutory limit of 11.5% and the industry average of 19.8%, allows the company to have a broader scope for lending and have enough capital to cater for adverse conditions in the operating environment. Profitability ratio of 31.05% is above industry average of 20.8%, meaning that the company returns more profit in terms of percentages as compared to the overall industry. Coming to the cost to income ratio, the company has a cost to income ratio of 46.1%, which is below the industry average of 79.2%, suggesting that the company is being run efficiently. The PB ratio of 0.36, which is less than 1, coupled with the PE ratio of 2, which is also less than the industry average of 3.3, serves as an indication that the share is undervalued. Now, coming to the valuation, I used the earnings per share, the PE ratio, and an expected earnings growth rate, which gave me an intrinsic value of 81 pesos per share, which represents a 26.56% increment from the current price of 64 pesos. Now, what is the investment thesis behind my recommendation? Well, CalBank has a solid track record of growth and even has more room to continue growing. Conducting a 3-year analysis from 2018 to 2020, looking at the profit after tax, total deposit, and total assets, we clearly see that CalBank continuously grow. And I believe that that growth will continue in years to come. Why? For the reason I'm about to enumerate. First of all, the company operates only in 4 regions of the country, which gives them more room for expansion in the future. Renewed confidence in the financial sector after the cleanup exercise by the Bank of Ghana will increase demand in banking services. Also, new minimum capital requirements of 400 million Ghana cedis makes it difficult for new entrants to penetrate the market, therefore giving some sort of competitive moat to players already in the market. Now, the company is keen on technology and innovation. They launched in 2019 the CalBank Agent Banking Services, extending their banking services through the use of agents in various locations in the country without the need to open a physical branch. Several researchers have also shown that in the near future, less customers will visit physical bank branches and will patronize more mobile banking services. CalBank has strategically positioned itself with the CalBank mobile app to embrace that digital revolution. Finally, the financial sector crisis, coupled with the coronavirus pandemic, led to a massive sell-off on the market, leading to most stocks fall below their intrinsic value, therefore providing value investors an opportunity to buy great company at a discounted price. And as Warren Buffett said, be fearful when others are greedy and greedy when others are fearful. That is why I believe that it is a right time to invest in the stock market. Now, looking at a chart and historical price analysis of CalBank, we clearly see that over the past year, price has formed a yearly low of 60 pesos. Since then, it has tested that level up to 4 times, failing to go below that price. This clearly indicates that 60 pesos acts as a level of support. So I therefore anticipate price to continue rising after the 4th bounce, which took place on the 6th of April. Now we can talk about investment without risk, and there are also risks attached to or associated with our investment. First of all, we can talk about the stiff competition in the banking sector. There are a lot of actors in the banking industry with a lot of resources that are all fighting for customers. Also, we can talk about the impact of the COVID-19 pandemic. We can talk about impacts such as high credit losses, economic contraction, reduced trading and trading income and net income, operational constraints of keeping employees safe and meet customers' expectations. We can also talk about the possibility of occurrence of a high number of non-performing loans. We saw the non-performing loans ratio increase from 10% in 2019 to 13.5% in 2020, mostly due to the coronavirus crisis. Finally, we can mention regulatory interference as the last investment risks, because we all know that the Bank of Ghana at any time can come up with new directives, and these new directives might affect the performance of the company. So based on the above analysis and the company projection, I believe that Carl Bank is currently undervalued by 26.56% after putting into consideration relevant risks surrounding the company. So this concludes my buy recommendation of the stock for investors with a target. So our target price is 81 pesos.